Folks, I don't know if you've seen it, but the early part of January, the real estate market seems to be evolving, changing. It's never boring. We've seen mortgage applications go up 3 weeks in a row. We've seen mortgage rates decline slowly. One of the things we need to talk about is getting pre-approval. What is it? When do you do it? What does it take? And to have this conversation, we have the one and only Dustin and Jonathan from Convoy Home Loans. How you guys doing? How you doing, Dustin?
Good. How are you doing, Mike?
I'm doing excellent. And Jonathan, how are you?
Surviving, trying to make it through.
There you go. There you go. Well, do us a favor. Let's talk about what is a pre-approval? When should people do it? What do they need to have? All of those things. Who wants to start?
I'll let Dustin start.
Okay.
Okay.
So what's a pre-approval? Why is a pre-approval important? Why should somebody get one?
Well, first, pre-approval will tell you that you actually have a reasonable chance of being able to buy a property that you're looking at, right? And most realtors are going to require it. Most sellers and sellers agents are going to not even look at an offer if you don't have a pre-approval. So that's, step one. And obviously reaching out to somebody like John or myself and the different ways that you can get pre-approved. But, you're always talking about a buy box, obviously, right? Before you can even really do a buy box, you got to have a pre-approval. You got to know what you can qualify for. And I'll let John take the next steps from here. But essentially, I think going through how you can get qualified, whether you go conventional, non-QM, bank statement, DSCR, knowing all those and how much you would get pre-approved for is important.
Yeah. So I think there's a couple of things I want to talk about our pre-approval, right? Again, as an economist, one of the things that people don't often understand is demand, right? Supply and demand. You hear economists talk about this all the time. What people don't get about demand is it's a two-step function. And for me, a pre-approval letter is vital. So let's go through the two steps and why a pre-approval is vital, in my opinion. The first step of demand is interest. I have interest in buying X, Y, or Z. That's step one. And that's where most people think demand stops. It is only step one. Step two of demand is ability or capacity. So I may have interest in buying Boardwalk on the Monopoly board, but if you don't have capacity or the ability to be approved for, you're not counted. Your demand, your dream, your wish doesn't fucking matter. If you're not approved and you can't write that check or get that loan, your demand doesn't count. And I think so many people miss that. So a pre-approval tells you, A, I can get a yes answer, and probably tells you right around where the max yes answer is. That's how I look at pre-approvals. Jonathan, take it to the next step.
Yeah, and then the other thing to note on the pre-approval is to know kind of what you are looking for and whether it's a primary or an investment, right? So we have a lot of clients coming in asking, hey, just in general, hey, I want to buy a property. And it's okay, what do you want? What's your goal of buying the property? Are you going to live in it or do you want to rent it out? Because the way to get pre-approved is very different for both. So it's very important, obviously, like you said, to know everything up front of what you're doing, know what you're going to buy, know the maximum of what you're going to buy. But with programs like, DSCR programs, there's not really a maximum based on your income, right? It's based on the asset itself and how much you have in reserves and how much you can put down. Like those things are the maximum. It's not necessarily a loan amount or a purchase price that's your maximum. So knowing what you want to buy is important. And then also the approach of, like, for example, if we're going to go buy an investment property versus a primary, there's so many different ways to buy primary. You can buy primary based on bank statement income, using full doc income, in some cases using stated income, which we've covered in other videos as well, not using income at all, period. And those are different ways that you can qualify to purchase a primary residence. Now, investment property, same thing. Bank statement income, DSCR, stated income. Like there's so many different ways to qualify. It's whatever is going to actually allow you to purchase the asset and get you pre-approved for the max amount. But in order to do that, first step two is also, hey, what are you actually looking to buy? Are you looking to buy a primary or an investment or a secondary? That's the once you have that clarification done, then the rest of it, reach out to us and we'll be able to kind of lay it all out for you.
Yeah. I think there's something else we need to talk about pre-approvals. This is something I learned very early in my career. So 20 some odd years ago. I don't know if it still happens, so this may be just my ignorance because I haven't needed a pre-approval in a long time. There's really two types of pre-approval, right? There's what basically you call somebody, you give them, they answer 3 questions, they give you a piece of paper saying you're pre-approved, which it's not even worth the paper it's printed on. And then there is what is really a pre-approval, where you get asked hard questions like, what really is your income? What is your credit? What is your credit rating? What are, all of these things. So does the industry still have 2 types of pre-approval, or has that gone the way of the dodo bird?
Well, they have that DU thing, right? Conventional, and a lot of conventional sellers want DU or
I don't know what
LP.
that
Like,
is. What's a
so
DU?
it's like desktop underwriting or
Okay.
loan prospecting, like Fannie Mae or Freddie Mac approval through their automated underwriting system.
So that sounds
So
like you have to answer some questions, because I
yeah,
remember, again, this is history. I haven't needed a pre-approval in a long time. I remember my broker telling me 22 years ago, Michael, I need to give you, like, what do you want to buy? I need to put on my pretty letterhead that says you're qualified to buy it, blah, blah, blah. And he didn't ask me any questions. He's like, you want to buy it? Sure, I'll write you a letter. So that doesn't exist anymore?
no, I mean that does, right? If it just overall sense, if the client's really in a rush to buy something, kind of like write the pre-approval and then get all the documents to get them the actual letter. But it depends on what you're buying. If you're buying a
So
DSCR loan,
that's why I want people to really understand. I do not think all pre-approvals are the same, but as a first-time buyer, you don't understand. So,
correct.
Dustin, give me an example of questions a potential buyer, right, that interest and now qualified. What kind of questions should they be answering to know that it's really a pre-approval? Because it's not, hey, Mike, what are you going to buy? Sure, I'll write you a letter. They got to answer some questions.
Yeah, I mean, look, John and I have done both, to be frank with you, but the only ones that have been, quick call are the clients that we've worked with that we already have all of their income, we
Of
have all of their,
course.
right? First time speaking to somebody, we're not going to send out a pre-approval unless we get all of your income docs, all of your assets, your credit report pulled, and then we'll have our own credit team run, what's the final scenario? Because it's a waste of time for, not only us, but the client. The client doesn't want to go out thinking they're pre-approved for XYZ amount when in reality, it might be approved for a third of that. So,
Yeah, because again, what happens when you don't get the real pre-approval? Sorry, Dustin. I just want people to realize the pain they're setting themselves up for. So you're some rookie investor who wants to get some pre-approval from some broker who does something. Then you go lock up a property because the paper is not worth it. Then you put up your EMD. Then the EMD goes hard, and the lender comes back at the end going, whoops, sorry, I didn't run the full file. You're not approved. Your EMD is gone and you screwed up. Is that fair?
I mean, that's happened. And unfortunately, like I don't know, maybe a couple of years ago, I wrote a pre-approval for somebody and then they didn't come back to me, but updated it like 3 months later and then thought that they were, all good. But unfortunately, it didn't work.
Sorry, it changes.
Yeah, no, I've seen that. And, I would just be cautious to anybody listening that is quote unquote a rookie investor, even if it's got 2 or 3 and your financial situation has changed. If whoever you spoke with, the loan broker, bank, whatever, didn't ask you, your gross monthly or annual income, didn't ask you, how much you have in down payment or reserves, didn't ask you about the amount of properties you own, or didn't pull your credit report, all 4 of those, and you didn't actually send him your income, you didn't like just tell him over the phone, I'm making 100K.
Actually provable.
Be very cautious of whatever pre-approval you get from them.
Yeah. So Jonathan, I'm going to come back to you. The other thing I think about pre-approvals that the rookies and first timers don't understand is, and I think Dustin hit on it with a real world example, is you need to go back and revisit it, right? Let's say you do the right one and you go full file, deep dive, you're good to go for $500,000, but then time goes by, let's say 6 months. That $500,000 pre-approval, it's probably not valid, right? These things have ages and they time out.
Yeah, I mean they time out with the market, right? Because the rates move, right? So in 6 months' time, if the rates go down, I mean it might be more than 500 grand, but if it goes up, then you're going to be stuck in a position where you can no longer afford that amount. Down payment also changes, right? The money you have in your account, because
LTV,
yeah, LTV. There's not a lot of people that keep a certain amount of cash in their account for 6 months, a year at a time, right? So all of that changes. Your income might have changed. Maybe you got to pay raise, maybe you got to pay cut. You know, maybe your wife had a kid, she can't work anymore, your financial situation. So if you're changing your financial situation in any way, shape, or form, anytime that changes, I think the pre-approval expires. If it's not the case where that's, you know, nothing is changing, then that's fine. But also your credit, right? Dustin talked about pulling credit. Credit might change, credit might get worse. So because credit's not a one stuck in the what is
not
it?
frozen
Ice.
in time.
Yeah, exactly. Credit's fluid. So the other thing that I wanted to talk about credit that I see happen a lot on pre-approvals that I wanted to kind of caution people about is if you do not need to get a hard pull, right? Try not to get a hard pull when you're in the preliminary
So
process
define
of
what a
looking
hard
for
pull
home.
is. Define what a hard
So
pull is.
yes, there's two types of credit pulls when a broker or a lender goes
Credit
to pull
inquiry.
inquiry, correct. There's a hard inquiry and a soft inquiry. So a hard inquiry hits your credit report, shows up on your credit report saying, hey, Convoy Home Loans pulled your credit. The soft inquiry doesn't show up on your credit. So the difference between the two is one affects your credit and starts that, you know, that time frame where if you are actually trying to pull credit or shop and you're doing something actively, then that's, you know, that's okay. But if you're just in the preliminary process and you get your hard pull, then you just dinged your credit, which may affect future availability and ability to qualify because your credit, every time it gets dinged, and let's say you wait 60 days later to get another pre-approval for another loan, then your credit's going to be lower 60 days later than it was 60 days before because every hard pull hurts your, you know, your credit. So what I do for Dustin and I do all the time, and we instruct all of our loan officers to do the same thing. If it's in the preliminary process, you will have a good, like if you're experienced enough and you've done enough loans, you know what works on a soft, like just looking at a soft inquiry, looking at all the liabilities, making sure everything's clean. You know whether what'll work and what won't work. So, you know, if your loan officer is going out there and doing hard pulls willy-nilly everywhere, I'd be a little cautious because that means that they're doing something unnecessary, right?
Yes.
Start with a soft inquiry. And then once you have something solidified where it's like, hey, I'm actually going to go in and get this property, get it into escrow, then you can do a hard inquiry and because that's needed and then move into process.
Yeah, this is why you need to be working with professionals. These guys have been in business a long time. I trust them. They're people I go to for my deals. How should they reach out to you if they want to have the discussions and maybe get pre-approved or at least have that discussion? Where should they go?
Yeah, go to convoyhomeloans.com and let us know you came from ORAT.
Now, if you let them know you came from ORAT, you get the super secret bonus of dealing with Jonathan or Dustin, one of these two guys. Thank you so much.
Thank you.